This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, August 27th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at September corn down 3 1/4 at 5.10 3/4. September soybeans were down 6 1/4 at 12.48, and September Chicago wheat was up 4 1/4 at 7.34 3/4. This morning we got weekly export sales. Sold a little bit of old crop corn, 31,200. New crop sales were solid, 1,066,400. On the soybean side, also a little bit of old crop, 73,900. Real solid new crop sales, 2,478,300. It was the upper end of the range there for soybeans. On the wheat side, also pretty good, 402,500. Upper end was looking for 550, so that was a good number. On the meal side, 104,700 old crop and 322,800 on the new crop. So a solid week of meal sales. Sold a little bit of old crop oil at 400 and nothing on the new crop. Good morning, guys. Wild day yesterday. Obviously, we had wheat hit limit up. Grain markets were really strong across the complex there. Dustin, I thought you did a wonderful job last night in the letter of talking about margin management and just using all the tools and being cognizant of the cash markets and how to keep keep your capital preserved in a wild market like this, because nobody really knows ultimately what ends up happening. So maybe just share a few thoughts here with us this morning, Dustin, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, I think, obviously there's a lot of excitement in the market, and it's great that it's rising. Like we have, in AgYield, we have a chart for past performance, and it just kind of shows, projected profitability through the year, by the crop year for each crop, for each entity. And you kind of see like what you're looking at for returns, throughout any point in that season versus what would have been done having done no marketing at all. And generally, when you're at new market highs like this, anything you've done obviously feels like a mistake, right? Like, oh, I could be getting $5.35 corn right now if I hadn't sold it at $5. So it never feels good to have a sale that's below the market. But I would definitely encourage every producer out there just to look at, what a gift this is for profitability. I mean, for the large part, I went back and read a lot of my own letters from back in June, and just, and you maybe even go back and watch a lot of these videos from June even, right? All these are cataloged. It's like margins were low, margins were negative. We were in farm bill payment territory. We were potentially in crop insurance payment territory. We're in none of those payment territories at this point. And there's even question now, are there going to be one-time direct payments if profitability goes up, right? And so this, you got to kind of play, I think, to the situation where we need to chill out on selling and marketing when prices are low and we're falling into safety nets. The last thing I think we should be doing, though, is overbuying the upside. Yeah, I'm all for trying to acknowledge this new market, condition we're in, that, and maybe it's going to continue to go. And it's nice to have a call spread up against sales that we're making or have made, but just to make sure it's not too much of a detriment, that if this is some sort of parabolic move that triggered a bunch of buy stops and buying that may not be warranted going into harvest if yields are not as bad as we project. We just need to really measure that, because even small purchases, 25% of production could be detrimental if we fall back to 460 or 470 corn. So one chart I just put in here is, let's go back to where a lot of this mania came from, and it really came after pre-op tour results. And just as a reminder of USDA deviation from its own trend, or from the 30-year trend, is in blue, and the pro farmer released number deviation from trend is in yellow. So we are looking at a number of years where the yield drop estimate going back through 2013 was probably a little bit more sensational than what actually happened. Not saying that that's going to be the case again this year, but it's just a reminder, because I think that a lot of X and Twitter is taking PF Tour number as fact and taking that into their balance sheet. And that's yet to be proven, right? We'll have to see if that's correct or not. It's just kind of a reminder of how sometimes it's a little bit more volatile than the actual result is.
That's good stuff. Justin, we were talking yesterday. It's pretty interesting when our markets start popping up on CNBC.
Yeah.
We always kind of have to take a step back a little bit.
Yeah. There's, I think a lot of things going on here. Obviously the markets have turned up, whether it started from the USDA, lowering their yield on the August report, and then Pro Farmer Tour. And then, people's imaginations run wild on who can write down the lowest number or, that kind of thing. But then I think there's just a whole lot of other things going on with outside money. Obviously we've talked about a lot that, funds have been piling in. I talked about yesterday how it reminded me of when the index funds first started getting into our markets in kind of 2006, 2007, where there'd be orders coming into the pit just for 20,000 contracts and 20,000 contracts and just relentless buying every day until they got their position on. And it reminds me of that to some degree. And then you see, to your point, Dan, I saw a hedge fund on CNBC talking yesterday about, all the reasons that they're doubling down on their ag position, and it's funny because, it's great that it's happening, right? We talk about, I remember when we were making lows, last few years, and people would talk about on Twitter that we should ban, speculators selling the market, because it's artificially driving prices too cheap. No one's complaining about these guys piling in on 400,000 contracts and driving prices to, 4 or 5 year highs, so, love them when they're on your side, you hate them when they're against you. Right. And they're on our side right now. So, but it's all the things that we've, Dustin brought this up, and it's totally true, is that the talking points that these guys are making are the same things that we knew in June when we were making contract lows. Strait of Hormuz, Russia, Ukraine, we've known for 5 years, on and on and on, right? Like the drought in Europe, knew that in June. So a lot of these things we've known. It's just that once prices turned higher, they're bringing the points back up. So I think it's just important to, to realize, like, hey, it's great. This is exciting. We're making, we're at these prices because all these things are now tailwinds. Broken record, but now it's this makes marketing easy if you think about it just on, for yourself. Like, how much do you want to risk? And that's always the point I come to. It's no different than just, developing a long position right now. It's like, okay, corn's at 535. Do you want to go buy, say you grow, 1 million bushels of corn. Do you want to go just get long 1 million bushels here? Because that's what you're doing if you're not selling, right? You've already spent the money to grow it. You've already done all those things. So now you just got to decide how much of that you want to risk. It's really hard when you're in May, some of these years when you have a big rally, because you have no idea what your crop is. Now you should have a pretty good idea. So again, like, not to be a broken record, it's hard. I was like, hope it keeps going higher, but you just have to be like level-headed here and be a business owner and say, how much do you want to risk for the business?
Yeah, it's a very good point.
And I think I would add to that too. And in June, when we were pushing down below the 5% deductible on price, where a lot of insurance payments would be in the money, especially with the popularity of ECO this year, we probably had, maybe a record number of acres projected to be in an insurance payment at one point because of the popularity of those low deductible policies. And the strongest farm bill of our careers, right? Below PLT prices for October 2027 payments, right? The average farmer was going to make more at 370 corn than if it had stayed right there, no question, because of the doubling up of payments on the way down outside of payment caps. there were no bulls in sight. No one's on X, talking about how strong things could get, or that this may be a little too soon to push the market this far underwater when we're coming off of record demand. And all of those talking points you're just talking about, right? Iran, drought in Europe, flooded out acres, northern Illinois, northern half of Illinois had a lot of, awful rain events. And it's just, it does remind me of a little bit of animal spirits. The market is like, the buys start getting louder, or the sells start getting louder. I just remember it's like no matter what, we seem to grow a big crop here, big crop. We've heard that last couple of years, even with all the southern rust problems in Iowa last year. Look at the yield for Iowa at the end. So I'd be very curious to see how this all plays out in the end, because I hope that it stays strong, and I hope we keep getting really good opportunities for 2027. But I feel like we're going to come back to these conversations. But man, that was a weird time.
Well, Dustin, I'll just add to that. Like, I personally don't think it's, Pro Farmer might have, gotten people excited to start. But when you look at December 27 performing like it has, where it's barely lost any ground to Dec 26 in the last few days, it's sitting there at, 530 plus, to me, that's money coming in for a lot of other reasons, and big volume trading out there. So like I said, that's what reminds me of like when the index funds got in, because they bought it all the way out because it was just investing in ag. And to me, that's what it feels more like. And, then as prices go up, right, then we can change our narrative and everybody tries to explain it and why it's really going up and all these things. But I think we've talked about on the show a lot that the amount of money in circulation is so big right now. And you look at, what these guys, I say these guys, big outside money managers can do to the stock market, something that's worth trillions of dollars. Mm-hmm. And for a few of those guys to come in and say, ag's got a story, I'm getting in. And then everybody can pull up a monthly chart, right? And you pull up a monthly chart, you're like, oh my God, like, it's been at $8 before, and it's only at $5. Right? It's like me getting into a stock I know nothing about, and I go buy it because it looks good on a chart. I'm sure there's some stock guy that's like, what the hell? Don't they know the price to earnings ratio, and don't they know the forward guidance? And no, I'm here to make a bunch of money, and it's going to go higher. Well, kind of feels like that to me a little bit right now.
Yeah, no, I think that's perfectly said. And they are like a bull in a china shop, right? They tend to make big waves when they come into our markets. I forget the bank actually now that I'm saying this, but there was a write-up last week about, another serious concern about future fertilizer, availability and price, that's kind of recirculating the news again, because of the Iranian, situation. You can divert oil through pipeline. It's still kind of yet to be determined what's going to happen with all these, products that we need to come through that strait as well. And we had Josh Linville on. I thought it was great when he talked about it, but it's like, it sounds like it's still a big question mark going forward. So I get it to a degree, and that we have to be mindful of what that could mean a year from now.
Yeah. And I think just to that point, like, those are all real concerns, and they were real concerns in June, and we were at 430, and they're real concerns now that we're at 530, so the same fundamentals can still be there, and price can be much different. It just happens to be that we really like what they're doing now. They decide, something comes out, and, they decide that the 50,000 contracts that they bought, they want to get out of and get into Tesla or whatever stock they want to get into. Like, you have to be mindful that they can change at any moment, or the political landscape can change at any moment. Like yesterday, running around that, China's going to come in town in September and do a big trade deal. We already did a big trade deal. Maybe they do a bigger one, maybe they don't show up. These things are just so fluid that you just have to be cautious. So.
Very good. Ben, a few thoughts from the East here?
Yeah. I think by and large here, we have pretty good crops. I think growers are very optimistic about it. You don't see anyone frantic to buy corn or soybeans here, which is kind of atypical for this time of year to bridge to harvest. As far as the board goes, we've had a 70-cent rally, essentially straight up. We've had two 10-cent corrections. Probably put a lot of people underwater on the trade side. Managed money has been, up until now this year, kind of been whipsawed in the grains. They're currently on the right side of it. But to Justin's point, if something were to change, you now have a massive long that could be exposed. And I think you just have to go back to the matrix, look at your profitability, and go from there. You could have some flashing signs today of potentially an inside day, which would be an indication of a loss of momentum. Just watching it day by day. I'm watching that and watching Dees to see if it wants to go back to a carry. It's inverted by a nickel now. And it's one of the things that is like ring the bell for buyers when you see those spreads go inverted like that. So been a great rally. Certainly we are vulnerable to headline risk in both directions. Yesterday you saw it. The market was kind of leaking a little bit, and then some things came out. Largest Russian shipper said we're not moving anything else, it's too dangerous. And then you get really harsh verbiage coming from Putin, and all of a sudden we're blowing another round of stops in. So I think the market's probably overextended itself a little bit, probably due for a correction. But right now the long is definitely fully vested in the grain markets.
Very good. Let's let's move over to livestock real quick here. Ryland, mostly higher trade yesterday. Interesting. We continue to get a little bit more guidance out of the White House with regard to beef prices. They continue to give us more and more narrative each day. And then cash hogs kind of catching a bid the last couple of days. So what are your thoughts?
Yeah, absolutely. I mean, we did see a little bit of cash bids creeping up yesterday, cautiously, obviously, in Iowa and Nebraska, right around 220 so far. Most of the trade has been at 218 for live and 345 for dressed. Yeah, the White House gave us a little bit more clarity on how this is actually going to go with the 300,000 pounds of 300,000 metric tons of beef that's going to be imported essentially from South America and distributed essentially tariff free. So, I mean, kind of restricting it only to lean beef trimmings and kind of first come, first serve in 3 30-day tranches, beginning on the 1st of each month through November. So we got that. So it just kind of gives the administration, I think, a little bit more, control over the situation, or at least publicly, that's what they're trying to show. But I feel like the damage has been done right now. I feel like we've priced in a lot of this bad news coming to the market here, and overall, beef prices have started to weaken. I mean, this is an obvious play to get beef prices lower for the consumer, and it's hard to fight that, right now with the expectation of what we're seeing. I think the market has priced in a pretty good chunk of that so far, but all in all, with cash prices still kind of hovering around here, it just seems like, there's going to be some caution, as we continue to kind of trend lower here. I mean, we did make a new low for the move yesterday, but did catch a little bit. It feels like we are deeply oversold. So recovery bounce is not out of the cards. Just a little bit of short covering here. Would not be surprised to see that in the next several days. And so far, we've seen about 1,300 head make it over the border from Mexico. So those numbers are very real. They are going to stack up. Markets, I think, compensated for some of that. But until we may start seeing bigger and bigger numbers as these weeks go by, and it kind of limits the narrative that we're trading a tight supply anymore. So I think those are going to be numbers to keep an eye on, especially in the feeder cattle market. Obviously, feeders have taken notice to this dollar rally in corn prices, and overall that really hasn't helped. So a big down in corn here would probably help feeders out just a little bit more psychologically. And on the hog side of things, started to drift a little bit sideways. You can cash market kind of level off the past 2 days. So it feels like we've kind of gotten that seasonal kind of out of our out of our heads for a little while, but we'll see how that goes. I think still all eyes are going to be on the carcass right now, and especially bellies. Bellies were down almost $7 yesterday. Seasonally, they typically turn down from here. So I think everybody's kind of hoping for a late fall rally or something post Labor Day, but as of right now, there just is not a lot of good news in hogs. Once again, still oversold. Could get that short covering bounce, but you baked in a lot of bad news to this market. So we'll see if we can finally see some short covering here.
Very good, right? Appreciate the update there. We just came into the open. We got September corn down 5 1/4 now, 508 3/4. September soybeans are down 9.5 at 1244 3/4, and September Chicago wheat's down $0.01 1/4. 729.25 is the last there. Tomorrow's Friday. We'll have Fun Fact Friday. Always a fun way to go into the weekend. So be sure to tune in. Also, link is in the description. We've referenced it a number of times here this morning even. Check out the War Room Report. Access to premium content, Dustin's write-ups on a daily basis there, reactions to USDA reports, really just an overall deeper dive into everything we discuss daily here on the War Room. So be sure to check that out. Also, a portion of those subscription fees go directly to support the AgYield NextGen Foundation, which has awarded 5 very deserving college students with some significant scholarship dollars. So if you'd like to support the foundation, learn more about it, check it out, give us a call. We'd love to visit with you. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. I'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content, all for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.